Boom, we are pre-recorded today, ladies and gentlemen. I'm going to be taking a look at Bitcoin, Zilliqa, Gold, Digibyte, and a few others. We're going to keep it quick today, the weekend market update. And with that in mind, stick around till the end because, why not? Give us a thumbs up. Love you guys, and we'll see you here quickly. Boom. So, Bitcoin on the daily, we've been watching this potential Wyckoff distribution model. Now, right out the gate, I want to remember to myself and remind everyone that being able to predict things is much better than being able to narrate it, and that's what we're trying to do. We've been watching this model since June. We posted this in our original charts back here, which you can find us by following on TradingView, and we've watched this rather nice transition of our original write-up to where we are now. So we've been following very closely here the fact that Wyckoff models can turn into an accumulation period. So if we continue up and start to hold above 9,800 and 9,900 specifically, where this blue line is at around 10,000, this would change the trend into a bullish sentiment. Now, there are a few ways to look at this as well, and I'm sure you guys have seen this on other content creators' charts, or more importantly, I guess, technical traders' charts. You're looking at, let's cut some of the tops off here, this very strong line of support, of resistance, we'll call it like the Great Wall of No. I think that's a great way to say it, the Great Wall of No. And we have not been able to close above with weekly volume here. So it's a very strong line. And then again, there's actually another one that comes out like this. So we're creating this rather big pennant that we see, right? So the reason why this is important, I think, looking at the longer time frames especially, is it just gives us a clearer picture of the volume that we're really interested in, right? So part of the trading mentality is being able to find good positions to enter and exit. And this is going to come in handy as an investor as well in the long term. But in the short term, for those of you that are like me and like enjoy the excitement of what the markets are doing on a daily basis and the trends are changing and learning about how those trends change and why they change, because they can change on the drop of a hat due to investor sentiment, right? So right now we're witnessing the Federal Reserve printing an enormous amount of money and governments around the world printing an enormous amount of money. Because I tell you something, what people, it takes a second to realize, but we can print more money, but we cannot replace people. We cannot replace intellectual capital or network capital, like the connections that those people have, not just the things that they do, but the people that they do those things with. That whole group, those circles are valuable. And right now we're in a spot where we can just print money, right? Maybe even at an exponential rate because technology is growing at an exponential rate. That's why we've seen such big moves in companies like Tesla, etc. We've seen a 200% to 300% move here. I'm going to go make a video specifically about Tesla. 470% in the last 380 days. That's a crazy move, and it's because of deflationary technology. So when we're charting Bitcoin, we're looking at deflationary technology again. And what's important about recognizing what happens in these states is that they can just keep printing money because technology is moving faster than the rate at which they can inflate to the system. And that's really, really difficult concept to understand, but it's important in these pandemic times that the next 10 years, taking into account that they might be able to ramp all these markets up and drive asset prices further while keeping the general consumer price goods index and that inflation level monetary or relatively low, right? So that the monetary aspects that you might need to acquire your daily food or shelter or transportation is actually quite cheap, and making it easier for other people to play that game. But again, massively extending the gap of wealth between those that have and have not, right? Over the last few years, imagine yourself with, say, $100,000 or $1 million or $10 million or $100 million. Where's that gap between what you can do with wealth as time moves on? And if these asset prices just keep getting higher, what you can do with that said wealth decreases, but at a much slower rate because they're able to keep the regular consumer price index low. I hope that makes sense. So the other thing we were watching here, and I want to point this out, was the descending broadening wedge inside of this pennant. So this would actually lead me to believe the bullish pattern, at least on the weekly, is possible too. One of the reasons why we're watching the accumulation and distribution charts so closely. So you have the 21 moving average and the 50 moving average between 8,500 and 8,270. If we see basically a drop down to those areas, very likely something like this. I'm going to draw it with just an Elliott wave, a drop down, and then above like this, boom. And who knows, we'll say maybe something like this. It could continue out bullish, right? And this is a very common broadening descending wedge, to see this at the halfway mark return and then shoot up. So, you just type in broadening descending wedge. I can't spell, but luckily the internet will do it for me. And you go, okay, well, what are these broadening descending wedges? Let's take a look. You can look at images. We have some of this stuff on Arcane Bear too. We're going to be producing more of this content as the months move forward. But basically, we see this microphone, like megaphone extension, and then here just on the E drop, it doesn't go all the way down, and it just continues and confirms outwards. So we could be witnessing this on the weekly right now with Bitcoin. We've pointed that out before, but more importantly, back to that daily chart, keeping an eye in this area of accumulation and distribution. So on the daily, we've been short since around June 10th, around $9,800, and I don't stay short here with Bitcoin, ladies and gentlemen. Every time we see like a relative bottom around 9,000 and these support areas around 8,700, I re-enter because we're at a really, really interesting point where we could continue up, especially if the Fed just keeps printing. We are not in a free market economy anymore. We are in a political economy. We are in a government-run economy. So they effectively control the money supply, therefore control the market sentiment. And I'm not going to argue against that. So instead, if those are the trends that continue to play out, those are the trends that I will follow. So, a retest of 8,700 here seems very likely, and we could continue out, or we could come back down lower. Now, again, coming lower would be healthy, but I'm not going to make a prediction yet. Right? I'm just following this model, because this could very easily just all of a sudden, okay, look, all I have to do is go, there we go, and now it's a Wyckoff accumulation model. So where are we in these models? It's always an important part to recognize, is this could all of a sudden shoot up, and it would change our Wyckoff distribution phase, right? So this is important to remember, that these ideas are mutable. They don't have to stay stuck like this. So it could out of accumulation and back into distribution. Okay, so keep that in mind. I want to take a quick look at Cardano, because you guys like Cardano. And something I'm really excited about pointing out here, and that we want to keep in mind. So remember those Wyckoff accumulation models. They're much easier to see when you hit a bottom. So if we look at Cardano on the weekly, we've had this consistent bottom that had been forming over the last year, and I ignored it. I missed it. But it's not the only one that's doing that. So just for reference sake, I want to show this really quickly. Here's these consistent retests of this 440 Satoshi area, right? Before a breakout of the accumulation area and beyond. So let's look at it as DigiByte right now, another potential Wyckoff accumulation model, following up the ascending triangle, still staying above the 9 and then the 21 moving average, looking healthy so far. Will it continue outwards? Now here's BAT. BAT hasn't broken out of that Wyckoff distribution model, so I'm going to be taking entries into BAT, because it was a very similar play to what we had on Fetch as well. So what I'm really trying to do here, and the reason why I'm flowing through a few different tokens at such a high speed right now, is not because I want you to see anything specific about any one of them, but the relationships between the similarities of each of them. And then that's what pattern recognition is about, is can we recognize these Wyckoff accumulation and distribution patterns. So about a month ago, we had our entry point here, and then we're looking for a profit somewhere between 370 and 450. I'm not sure if we're going to get that, because we've actually been hitting a really, really solid wall of, I'll call it the wall of no. Again, I think is a nice fun name for it. The wall of no here at around 335 on the daily. So the Wyckoff accumulation, and then we see the spring test of phase E, and then a breakout and into our potential profit points. So what about Zilliqa? We've been watching Zilliqa recently, and lo and behold, when you zoom out on Zilliqa, oh crap, that same Wyckoff accumulation model had been taking place for months, since from July to July pretty much, and I missed it. Okay, well now I'm on the hunt for it. This is one of the fun things about growing as a trader too, is I never really understood the Wyckoff model. Now I'm like, oh, this makes sense. I can very easily incorporate it into a bunch of my other pattern trades. And more importantly, it shows me where the whales are playing. The whales are accumulating right now a bunch of alternative tokens, somewhere between a box range of 50 to 60%. And we've seen that multiple times over the last few months, right? We saw it with Cardano, 50 to 60% range from here to here. Right, on the accumulation model. XVG as well, this beautiful Wyckoff accumulation model, multiple tests in the bottom, and then another really big 30 to 40% box range, just like this. And where else have we seen this? Sorry, not seller. There was one more of them. And again, I'm not trying to show you any one token specifically, other than the fact that, yes, a shout out to Jerry in the Bear Den. What you want to do is find them before they explode. So both XLM and BAT are the two tokens I'm going to be trading next in this short-term range, because the exposure is very, very limited. We see consistent box range identical to what we have seen before with other tokens. So I'm going to be trading these ones now. And finally, just where we were on the Zilliqa trade that had been posted here. Again, you know, that beautiful box range accumulation at the bottom. And now are we going to see a wave 1, 2, 3, 4? Wave 4 should go around awkwardly for a little bit. So I'm not going to touch Zilliqa on too much of it unless I see a constant hold above the 21 moving average here. So there's a lot of really exciting trades that are coming up. And this new accumulation model has made a huge difference in my ability to recognize, are we at a bottom? Like, did we reach a bottom, right? Like with LTC, we've been driving lower and lower and not really been able to create a bottom quite yet. But if you measure this box range around 50 to 60%, we actually might see the formation of this accumulation area, which means I just can reduce my exposure time and increase the profit potential, right? Because if you look at what Cardano and both Zilliqa did off these accumulation areas, let's say from even the breakout, it's a 70, 80, maybe even 100% moves. I think it was even higher on Zilliqa. We're talking about the breakout above the Wyckoff model. It's 200% in 150, in 159 days. It's a very low exposure time, and the risk is very low too, because we know what the box range is, right? We know that the box range has been tested a few times, so it gives us a pretty solid area of understanding. Anyways, I'm going to leave it at that, ladies and gentlemen. Really excited about this. This is, I think, going to basically be what the next few years look like to some degree, is paying attention to multiple trades and investments. So it's really exciting. Shouts out to all the private Bear Den members who make the place what it is. So we call All Learn and Grow Together. If you want, you can sign up for our free newsletter or paid newsletter by going to arcanebear.com. We send out updates like this quite frequently, and we're going to be doing it more and more as we grow and build out that kind of infrastructure to make this type of assertion. I've been trading for quite some time, and I've learned so much. And I think that's one of the hard things for people to recognize is imagine going to an education system of some kind. It usually takes a few years to get a really firm grasp, just be able to execute on those things. You can type in anything you want. You can figure out every type of pattern that there is on the internet for free. The Arcane Bear Den has just been this beautiful place where people can feel accountable for the trades, ideas that they're sharing, and chat back and forth, so that you can really get to grow on what you're doing. So keep an eye on both XLM and BAT, guys. This is what we're going to be going through in the private Bear Den over the next little while. But just in general, what a beautiful Wyckoff distribution and accumulation period here we're seeing in both XLM and BAT. I'm very excited about that. So we'll see you guys again on the other side. Thank you to all. Thank you to everyone that helps in the background. Makes it what it is. There's going to be a free newsletter that was coming out this month about Kyber Network, written by Robert, another one of our Bear family members. So yeah, again, give us a thumbs up, like, or thumbs down, whatever you guys want to do. Just click that button. YouTube loves the attention, and so do we. And leave us some comments, all that fun stuff. I'm really appreciative, guys. Remember, I'm not interested in anything other than finding the truth. So if I upset you by where I'm going, it's because the truth is upsetting, and that's kind of a bitch sometimes. And I know how that feels, because I don't want to be right about this shit. Like, when we posted the newsletter about the pandemic going on for 18 months and us being locked down, I'm not like, yeah, we're going to lock down. This is fucking awesome. Like, I'm not excited about reading and learning this information too. So understand that sometimes we can make money off of it, sometimes we can't. And when we can't, all I want to do is try to find the truth. So I apologize if that's offensive sometimes. Like, some of the topics we go over, and even just in passing, is because we're trying to understand what's happening in the future, because then we can make better trades and we can live an emotionally calm life, because we can prepare for what's happening instead of every day meeting kind of like a new chaos. So stay healthy, stay happy, and enjoy what you have, because life is temporary here. So I love you guys. We'll see you again soon.